Right. Hello, everyone. Okay. Hello, everyone. Sorry, my laptop is hanging at the back end, so took a little bit of time to get myself started. Okay. All right. Now, welcome everyone once again to Portfolio Building Live with Terence for Cashflow. If you can hear me, please drop a note, say hi, so I know we're ready to get going. All right. Hello, Simon. Great to have all of you here. Okay. Let's get ourselves going. So, welcome once again to this weekly Friday live on Facebook segment where I look to educate all of you, okay, how you can build a portfolio building. How you can build a portfolio building it around option selling, okay, and we will cover one main strategy in this segments, right? And in all these sessions, I'll be covering it based on portfolio puts. Now, so for those of you who are not familiar with what's portfolio puts, I'm an option seller. So I'm looking to sell put options on stocks that I'm a willing owner of. Okay, I'm a willing owner of these stocks, but instead of buying them outright now, okay, I'm choosing to sell put options instead. Okay, by selling options, I get to collect the premiums or what is called the price of these options that I'm selling in exchange for an obligation to purchase those shares. Okay, so I'm a willing owner of the shares, but what I really want is those premiums. So when these option premiums expire, all right, I will make all the money that I've collected. Okay, so that's the aim of this strategy over here, and that's what we'll be doing on the stocks that we cover on a week-to-week basis. Okay, so far we have done it for many weeks, and as of this moment, I have only oh my goodness, I have only two positions. One on Nokia stocks, which I'm assigned. Okay, I'm assigned on Nokia stocks in, when was this? November or August. Oh yes, I saw the November expiry put option. So I'm assigned Nokia stocks in November, and I'm still holding them onto them right now. It's a small investment of just 300 shares, which is $1,500. Nothing too major. Right, and I have a VIX portfolio puts, which is meant as a hedge for the entire portfolio. It's not working too well right now. All right, and I have a Cardinal Health, right, which we established last week. Right now, so let's get to the markets. Let's see what's in store, what we have, and what we will be doing. So first up, let me bring all of you up to speed with what's expected of the markets. In this segment, it seems like my platform is always lagging. There's always some performance error. Okay, now, so we clearly have the breakout. All right, so we have the breakout over here from the 4,080 level. All right, and market has stayed strong since then. All right, it's aging to higher highs every single day. Right, but we're starting to see some problems happening in the markets. We start to see those divergence happening in the slow stochastics, but we're still not seeing it in the RSI. The RSI has actually made a new high. All right, it's not come lower, but it is flattening out. Right, so if the RSI starts turning lower, we may see the S&P 500 come back down to test the 4080 support level. Okay, so if that happens, it may set up for a bounce. The next bounce from there. Okay, and what I actually want is for the next bounce to make a higher high, but for us to have a divergence on the indicators, right? And when we have that, that is the time that you want to sell the market, right? That is really the time where you want to sell the market. Not right now, everyone. Now it's too early, right? Now it's too early because the MACD is still steeply upwards, which means this market has legs. This market has momentum, right? It can flip anytime, but this market has legs behind it. Okay, now, so let me take a little bit of time, just 5 minutes, okay? Let me explain the rationale of who's buying right now. Okay, because many of you are wondering, Terence, everybody knows it's so expensive. Who's still buying, right? Nobody's buying, right? That's the problem. Nobody's buying. All that is happening right now is basically what they call a dynamic hedging in the market. Now, what does it mean when you say dynamic hedging in the market? All right, with this breakout move, with the bond staying interest rates staying low. What's happening right now is the technologies have rebounded, right? And many people have actually shorted technologies when NASDAQ was weak, right? So what happened was when technology bounced because of that, all right, a lot of them were caught short. Okay, so these short sellers are being squeezed So I think now when I say short sellers being squeezed, all of you should be familiar these days because of what happened to GameStop, what happened to AMC, all right, and what happened with those Reddit traders, correct? Now, so the same situation was happening on, a bigger market cap scale, right, but on a smaller group of people, right, with all the trillion-dollar market caps. That means you see it happening with Apple, you see it happening with Microsoft, you see it happening with Amazon, right? They were all busting upwards. Why were they busting upwards? Because a lot of people that were short, right, they had their stop loss triggered. So when they had their stop loss triggered over here, all right, it caused the buying to happen, right? So a lot of people, these people need to cover their shorts, right? So they add to the buying. And then the next problem, right? And then the next problem is this, right? When people go to the stock market, okay, when people go to the stock market and they're buying Yes, correct. Right? When people go to the stock market right now and they're buying call options, what's happening right now is the market makers have to take the opposite side. That means somebody has to give you those prices, and they are what we call the market making companies. And you must understand, the market making companies are not interested to take the opposite side of your risk. No. All right. They will always hedge off their positions. So you must understand, when you buy a call option, you have the right to buy the stock. But they, as your counterparty, right, when they sell you the call option, right, they have the obligation to sell the stock. So when they fill your orders, they are short a stock position or potentially short a stock position, correct? Because they may have to deliver it to you, right? So what are they going to do? They know the market is high, right? They know the market can continue to push higher, so they're not going to keep themselves exposed. So once they fill your order, they're going to go to the stock market, right? And the only way they can hedge is to go and buy the stock before you do, right? Just in case when you choose to exercise them or they get into trouble, they have the stocks to hedge their entire position. So can you see what's happening right now, right? It's basically a case of buying leads to more buying. So the short sellers are being triggered, right? So all these trillion-dollar market cap tech stocks, right, are being bought. They're being pushed higher to breakouts, right? And these breakouts, we all know that these trillion-dollar market cap accounts for 20% of the S&P 500, right? So this is pushing the S&P 500 to new highs, right? And indirectly, people are buying call options to try and benefit from it. And when people buy call options, the market maker has to continue to buy more of the S&P 500, all right? And to hedge themselves, sometimes what they do is they go into the components of all the stocks as well. So basically, that's what's happening right now. Nobody is buying. Nobody is crazy enough. Trust me, a lot of investors these days in the stock market, they're a little bit more educated after what happened. Yeah, okay, so they know it's expensive. Nobody is willing to risk, their money in the markets right now. But it's just the market and, the dynamics behind it, right? So it's the system that's playing the system itself, right? But all I can say is this, right? Now it's the loading up, which means the buying begets more buying, right? You can only imagine, right, when the flip side happens. That means the unwinding will happen. And when the unwinding happens, you know one thing as well. The unwinding always happens much faster, which means when this current situation unwinds, okay, and the market comes off, all right, the flip side will push things even harder and faster than what's happening right now. All right, we all know this. It's much harder to push the market up than to push the market down. Yeah, okay, all right. So this is the trap behind the market over here. You cannot go long right now. Going long is a very, very dangerous affair. Unless you are a willing long-term investor of any stocks that you're looking to go long. So same with us. We are portfolio investors right now. So if I'm selling any put options on new stocks right now, I have to be a willing owner in the long term. Right? I have to believe that these stock prices right now, where the stocks are trading at, okay, are not going to crash in any time soon. Yeah, okay, will I be able to find some stocks? I did. I found one. Yeah, okay, I'll be adding it to my portfolio today. Okay, but this is not the time to go crazy and to load your portfolio with maximum exposure when the market is currently as high as it is right here. Okay, everyone? Right now, so first up, let's handle our VIX portfolio hedge, shall we? All right, so this will expire on the 20th of April. So that's actually going to happen middle of next week, right? So we need to take care of it right now. Oops, give me a minute. My portfolio, Platform is hanging up as usual. Oops. Oh, I hate this portfolio. I hate this platform. It's too much demands. All right, so we have the 20th of April 22 put options. So let's go ahead. All right, let's see what is worth. The 22 put options over here will be covered. Right, it can be covered at about 490 today. Right, so we will actually have to pay 490 to cover it up. Right, so we will have a loss over here. All right, now, so I collected 85 cents for that. So if I have to pay 490 to close it up today, right, that will give me a loss of about 405. All right, 405 on this portfolio hedge. Okay, 405 on this portfolio hedge. Now, so what I'm going to do instead is, all right, because I cannot own this as a stock, right? So I cannot, let it get assigned because it's only settled for cash, which is the profit and losses that I have on this trade. Okay, so what I'm going to do instead is I'm going to close this right now and I'm going to move the hedge. Okay, by moving the hedge, what it means is, I have to move it to a further month. Yeah, okay, I have to sell a new expiry over here. So what I'm going to do is I'm going to move it 1 month from here. I'm going to sell the 19th of May, all right, 22 put options. Okay, I should be able to get it for about 380. All right, I should be able to get it for about 380. So I'm going to close the current one that I have, and then I'm going to open up the I'm opening up the 19th of May 22 put option as a replacement. All right, this will be a replacement for this trade. Now, the only reason why I have to do this right here is because this VIX or volatility index does not have an underlying. That means you cannot take assignment, right? There's nothing to assign to you. At the end, when it expires, all they will do is to settle it for profit and losses. Okay, it'll be settled for profit and losses over here. Yeah. Okay, so I will not wait for that to happen because we are not having a live session. So what I'll do is I'll pay to close it today. And then I'll go ahead and sell the May expiry. Okay, 22 put option. Okay, it's the same trade literally. Okay, just 1 month from here. Okay, so I'm going to place 3 contracts over here. All right, let's see what's the price right now. 22, 380. All right, let me try it for 380. Okay, so please understand, I will be doing 3 contracts of this. And the reason why I'm doing this is because I am trading currently on a live portfolio, and this live portfolio has $100,000 inside of it, right? It has $100,000 inside of it. So I'm building based on a $100,000 model portfolio that you're seeing right now. Okay, so the order is placed at 380. You can see me on the ask over here, right? The last done is 370. All right, I may have to lower in order to get myself filled. Okay, now I'll leave it for the moment. Okay, I'll leave it for the moment. I'll have a look and we'll go ahead and place our new trade for today first. Okay, and I'll decide if I want to adjust it lower. Yeah. Oh man, this lagging on my portfolio is this lagging on the platform is terrible for me. Right, it seems like these options are trading in 10 cents interval. So if I do adjust it downwards, I will have to adjust it to 370, right? To 370. So it's either 370 or I stay with 380 right now. Okay, all right, now, so how did they get 378? I don't know, right? They rejected my order when I tried to put 375. Yeah. All right, so it's still working right now. I'll hang on to it. Let's go to the new stock that I want to add to my portfolio today. I'm going to add something very, very interesting today. Interesting because those of you who know me will probably know that I never traded such stocks before, but I do like the potential behind it. All right, and I'm going to trade it. All right, so everyone, ready or not? This week, what I'm going to do is I'm going to add a portfolio position on JD. Yes. Right, for my students, you heard me right. I'm actually going to open a position on JD. Yeah, okay. Now, one of the reasons, because my entire portfolio is very empty right now, apart from the CAH position that I have, that's all I have. That's the only thing that my portfolio has. So I'm okay to expose my entire portfolio to one growth stock. Yeah, I'm perfectly fine with that. One growth stock, I'm okay with that. Yeah, okay. Now, so JD, I'm actually looking to sell a long expiry option. Right, I'm gonna go 21st Jan. Right, 21st Jan. Okay, the stock is right now is 77.24. All right, I'm actually gonna sell the 77.50. All right, I'm gonna sell the 77.50 put option. Yeah, okay, all the way into January. That's 40 weeks from now. All right, 40 weeks from now. Now I'll explain my rationale behind this trade in a while. Okay, all right, and why I'm doing it this particular way. All right, but let me fill up the order first before I go into the explanation. I'm gonna try to gun down about 940 or 945. Okay, I'll try 945 first, and then we'll have a look. Okay, if it gets filled. Okay, but please beware. If I'm selling the 77.50 put option, it means that for every one put option that I'm selling, right, I need to set aside $7,750. Okay, because I need to purchase 100 shares, and that's going to cost me $7,750 US. Okay, now I'm going to do about 2 contracts of these. Yeah, okay, 2 contracts of these. So that will set me back almost 15,000 when this position is filled. Okay, all right, it'll set me back 15,000 when this position is filled. Okay, all right, so I said 945. Let's try. All right, we're in 945, but we're not getting filled as yet. Okay, 945 is in, it's not filled as yet. Now, so let me take the time. Let's see if the market will bite. Okay, what I'm going to do right now is to explain the rationale. Now, if we do this trade, okay, you'll see this first. Let's do the numbers. If I do this trade today, all right, JD, okay, portfolio puts. Okay, we're going to do Jan 2021, right? Okay, now, so 77.50 puts. We're not sure if we get it filled, but at 945, let me show you the ROI calculations. Right, that's going to be 945 divided by an investment of 77.50. So this trade will bring about 12.2% ROI, right? But this trade will last 40 weeks, right? It's 280 days. That works out to 40 weeks nicely on the dot, right? So all I need to do is to divide it out by 40 weeks and then multiply it or annualize it back into 52 weeks. So this trade will actually bring about 15.8%. Now that's slightly under my target of 20% for every trade on a portfolio. Okay, but this trade has 40 weeks to go. And in fact, I have an objective behind this stock. Right? I feel that market correction may affect the prices. Okay, but as of right now, if you do look at the stock is trading at a very clear support level. Right? It's trading at a very, very strong support level. And not only that, okay, I do like the fundamentals behind the company. I just recently met a friend, right, who, has stayed and worked in China for a while. And he's telling me that JD, is an expansion mode, right? It's an expansion mode over here, right? Now, another reason why I like this is because, let me just show you. If I pull out a simple indicator, nothing rocket science over here. You can clearly see my platform is obviously lagging very badly. Oh, man. There we go. Right, the 50-week moving average is where the stock is right now. So I'm not talking about 50-day moving average. I'm talking about 50 weeks moving average because I'm looking at a weekly chart right now. Okay, so that's where I feel that JD is at a very, very strong support level. I may be wrong. The market may push it lower, but that's why I'm gunning for a longer expiry. Just in case I'm wrong over here, right? I have time for the market to push me back into the right direction. Yeah, okay, I have time for the market to push it back into the right direction. This option doesn't expire all the way to January next year, right? That's like 8 months from now. Okay, that's like 8 months from now. So I'm not worried. And plus, the fact that this is a portfolio put position, which means, okay, that I've already allocated the cash to buy this stock if I need to next January. Yeah, okay, and it pays me 15%, not too bad. That means I'm protected towards the downside by 15% by next January. If the stock drops 15% from here, all right, I'm still break even. Yeah, all right. So it's gave me quite a bit of buffer over here, right? And if I can close this trade, that means if this 50-week moving average holds and it starts bouncing up from here, I can actually close this trade in the next 10 or 20 weeks. So by closing the trade early, it will actually bump up the annualized ROI. Okay, if you're not too sure about this, you want to find out more about this, you can consider one of our mentorship programs as option sellers that we run. Okay, or our trading membership, which is set up recently. All right, consider that, and you can educate yourself as an option seller and join us on this journey. Okay, because we do cover different strategies, which allows us to use much smaller capital than what you're seeing right now. Yeah, okay, all right. But let's leave that aside. Okay, you can send my team an email if you're interested to find out more. Okay, but on this trade, I leave myself the room to close the trade early, right? If the premium shrinks, yeah, okay, and the stock rebounds. That's what I'm looking for. That's my objective. But just in case I'm wrong, I'm selling a longer expiry where I'm not assigned the stock anytime too soon. Yeah, all right, not anytime too soon. Yeah, okay, all right. So that's the objective that I have behind the trade. Let's see if it's filled. Let's see if it's done. Wave Rider, I see your question over here. Give me some time. I'll address it. Right, my trades seems like still not filled. Where are we? I'm still here at 9:45, not moving anywhere. All right, market is not in the mood to handouts, to do any handouts. Yeah, market is in no mood to hand out anything over here. All right, I'm going to try this order today at 9:40. I'm not going to adjust it anymore. All right, I feel 9:40 is a fair price to pay. If you don't want to give it to me, then just too bad. Okay, because the last trader price 9:15, but the stock went down today. All right, the stock was down. So I should be able to get a higher premium. All right, oh heck it. I'll accept 9:35. That's my last deal over here, 9:35. They heard me. They heard me, right? They heard that my phone was near me. They heard me. They heard me say that this is my last one. Look, they filmed me. They filmed me at 9:35, everyone. All right, they filmed me at 9:35. Oh, yes. Yes, thank you very much, Uncle Fu. I recorded it wrongly. It should be Jan 2022. Okay, right now. So I got filled at 9:35 over here for JD. Okay, JD, I'm filled at 9:35. Okay, 9:35. Let's go check out VIX trade. 19 of May, 22 puts, 380, 370. Looks like I've got to hit the deal at 370. All right, I'm lowering it to 370. I'm going to hit the market, all right, to get this filled. All right, so remember, if you have followed the trade over here, close the one that's expiring, the April one, all right, and then after that, go after the 21st May for 370, okay? All right, my May order over here for the, all right, everyone, my May order for the VIX over here is filled at 370. All right, so 370 is filled, is done. Okay, now, so our portfolio management actions and adding a new trade is done. Let me hang on for a minute. Let me go ahead and check out one more trade and what the stock has done. If I do still have an interest on it. Oh, Okay. Right now. So I've just rechecked again, and I've gone after the Medallia trade that I talked about last week as well. Right. So I'll also take up a position on Medallia. Right. So Medallia, which I've discussed last week. So those of you who want to find out more about the companies, the fundamentals, please go to our Facebook group. All right. Catch up on our Facebook live session last week. All right. The recorded version and the hosted version of it via our Facebook group itself. Okay, scroll to the feeds and check for last week's video, right? And you hear me talk about Medallia. Our order that we placed last week was not filled, right? So I'm going to try it again right now. Okay, this week I'm going to gun after the 18th of June. I'm going to give this trade 60 days expiry from now. And I'm going to try to get the 30 puts done for 285, right? The 30 puts done for 285 over here. So MDLA, okay, Medallia. It's one of those growth stocks over here that I'm gunning after. It is a SaaS company, all right? So if you don't know what it stands for, software as a service, right? Software as a service company. Okay, this is a relatively cheaper stock, so I'll allocate some capital to it. The standard 3 contract size, I will trade it. All right, so let's go 285. All right, it's done. All right, it's filled immediately over here. So if you can see, right, 285 suddenly became the last traded price. Okay, so I have 3 orders done today. The Medallia, June 18, 30 put strike, 3 contracts over here for 285. All right, please remember to make sure that you're well liquidated for these trades. All right, you're prepared to hold the stocks. So that means for these trades that I've done today, let's go ahead and do that. 77.50, I'm filled today on 16th of April. Okay, so this trade will pay me, right, $2,800 in cash flow, right? For, no, that's 3 contracts. I need to downsize it to 2 contracts. They'll pay me $1,890 in cash flow. If I close it successfully for half the premiums in the next 1, 2, or 3 months, it will still pay me $900 in cash flow, right? But I need to set aside $15,500 for this trade, okay? Right now, next up, Medallia. Oh, man. Right, so 3 contracts, Medallia, MBLA. This is June, 18 June. All right, this is 30 strike puts. So I've set aside 9,000 for this trade. I am pocketing 285. Right, so that's gonna still pay me $855, right, on a $9,000 investment. That's almost 10%. That's like 9% return, right? 9% return for 2 months. Right, and that's definitely awesome. That's like 4.5% a month, right? So I don't need to annualize it anymore, right? It's a really great trade over here. Okay, now, so right now with those 2 new additions, right, and with the switch of the VIX over here, all right, so this is what's gonna happen. All right, so I moved it to the, what May was it? 22nd of May. Oh man, 22nd May. All right, I do have to type it out. All right, I did it today for 16 April. Right, and we did it for 370. And now, so if you see something over here, right, you'll notice that, right? Yes, I did realize a loss over here, but if this second expiry date for the VIX option that I'm selling, right, if it ends up expiring worthless come May, right, which is 1 month from now. So if the market collapses, the VIX spikes all over again, right, and this option expires worthless, right, the entire trade out of the 2 transactions will actually become profitable, right? So this is one benefit that we have as option sellers because we are always getting paid, right? So if we get paid more, right, than any losses that we accumulated, right, the entire transaction is still profitable. Yeah, okay, so this is definitely one of the reasons why I love being an option seller, right? That means if I have a loss, right, it's only temporary, it's not permanent, right? I have many means and ways to actually recover that and turn the trade profitable. Yeah. Okay. All right. Now, so I'm going to go ahead to the chats right now and the comments and answer some questions that have been raised up. Now, while I do so, if you do enjoy the segment today, please, all right, help me out, okay? Because I've been running these sessions for almost half a year and longer right now, okay? And we are getting more and more people attending these sessions, which, you know, I'm very thankful, right? For those of you who have been sharing this video live every single week, right? If you have not done so yet today, could you help me click the button called share on this Facebook post, right? To reach out to many people on your feed itself, okay? And to let them know they can actually attend, all right, a free live session every Friday together with me, right? And they can figure out how they can build a portfolio for themselves using the skill set of option selling, right? That pays them up to 20% ROI per annum, right? I will be monitoring this portfolio. I'll be building it together with all of you, right? So if you find that it helps them, right, please share out this video so we can reach out to more people. And at the same time, right, for this feed to, you know, kind of be shown on Facebook itself, right, we will need your help to click those like buttons as well. Yeah, all right, help us click the like buttons over here. Yeah, all right, and, you know, help us get out over here on Facebook. Yeah, thank you very much. All right, now, so let me get to some questions. Rave Rider, all right, since we're on VIX, how do you decide the strikes? For this case, I'm deciding the strike simply because I was happy with it the last time around. Yeah, okay, so all I'm assuming is the market do resume the selling side, right? We will see the VIX spike back above 22. Yeah, all right, so I'm actually trying to recover my losses on this trade. Yeah, okay, so the reason is very simple behind this. I'm sticking to the same strike. Okay, I'm staying with the same strike. That's it. Yeah, all right, now, so selling the put options and buying the calls, it's literally the same sided trade. Yeah, okay, it's literally the same sided trade, but I don't want to be paying for those options. That's it. Yeah, okay, I'm an option seller. This portfolio over here is built on option selling, right? So that's how I position my trade. Yeah, okay, now, as I said earlier, if you want to find out about other trading strategies that we adopt, other trading strategies that we use, we do cover them in our trading memberships over here. So if you want to find out how you can be an option trader and a prolific one using different option strategies to benefit in different situations and environment, all right, consider joining our membership. Yeah, all right, where we run 2 live trading webinars every week with our members. Yeah, and, you know, in the last half a year, I've actually gone down and completed 100 trades already. Yeah, with members. Yeah, okay, now, so that's something you want to look at. So next one, right, Nelson, right, Nelson's question, JD is a China stock. Yes, right, JD is a China company, right, it's a China company over here. Yeah, JD is a China company. All right, Wave Rider's question, all right, is it at 200 EMA? I'm not too sure, all right, but what spotted me and instigated me on that trade was when I saw that it is on the 50-week moving average on the weekly chart. Yeah. Okay. All right. So once again, let me remind all of you of the disclaimers as well. Just standard for every session. Please, before you do those trades on your own personal accounts, right, do your own risk assessments, all right, and risk judgment, and make sure you're fully comfortable with any of these trades before doing so. All right. Thank you very much, Wave Rider. All right, thank you very much. All right, and I believe I'll be seeing you at the 24-hour really soon. Yeah, Wave Rider, I remember. Yeah, I'll be seeing you really soon. Yeah, right, really excited to get you started. All right, yes, Andy, you're right. I recorded it wrongly, all right, just like Uncle Fu pointed out. All right, yes, I forgot to change it. I just typed that because I didn't see the exact expiry date yet. So it's 21st January. Now I know why. There we go. This is the right one. Okay, Andy. Yes, it's correctly recorded right now. All right. Thank you very much, Nelson. Thank you. All right. Facebook user. All right. I have no idea who left this comment. You know who you are right now because you're seeing yourself on the screen. Do me a favor, okay? Please remember, as you see the scrolling thing at the bottom, right? In the Facebook post itself, there's this thing which says streamyard.com/Facebook. Can you click on it, right? And you'll see an approve button, right? That will approve Facebook for your use. Okay, and next session onwards, we will be able to see your profile and who's leaving that question. Okay, all right, thank you very much. Now, so let me answer your question first. You select your strike price based on any criteria. All right, yes, we do. All right, so on a simple term, right, I select it based on support levels. I base it also on fundamental levels, right? But to find out our exact criteria, I will be covering all the criteria in very specific details, right, in our trading membership, right? So you want to find out more how you can be a prolific option seller, right? Do consider one of our trading memberships, right, which comprises of 2 live trading sessions every week, right, with me and my senior trader, okay, or one of our live trading mentorships, right? See which one, right, fits your preference over here, right? Consider them if you want to embark on your journey as a prolific option seller. All right, Will, nice to see you here again. All right, Will, let me see. Leap selling puts. You don't enjoy the time decay in earlier months, right? It all depends, Will, because you must understand, with this trade, just as I explained earlier, I do see the probability of a bounce off the support. All right, so the decay in the delta will help me, right? You realize I'm selling at the money over here, right? So the decay in the delta will be actually what I'm looking for. I'm not looking so much for the time. Yeah, Will? Yeah, okay, all right. So again, these are little nuances where you get more familiar and accustomed to, and you know how to digest and, you know, take your picks when you are a very experienced option seller. Yeah, okay, what you're saying is not wrong, right? People keep telling you, all right, 30, 60 days expiry is, you know, the prime time for time decay, right? But certain times when you look at things from a fundamental angle, you look at things of why you're selling an option itself, you will dig deeper, you will dive deeper. Yeah, okay, and you'll understand things better. All right, okay, now. So these are also things that I cover in the mentorship and I teach my students. All right, so join us, all right, if you want to find out how to understand these things a lot better. All right, Wave Rider, let's go to your question. Understand selling puts collect premiums. All right, my cue is more like if you have a big portfolio, right? If you want to buy VIX for protection, how much do you buy? Wave Rider, put it this way. All right, put it this way. All right, it all depends on how much is your portfolio exposed on the long side. Yeah, all right. How much is your portfolio exposed on the long side? So if you have 50K exposed on the long side, right, you want to make sure that when the market collapses, right, the spike in the VIX or the potential profit that you can make in the VIX should cover at least half or more of those losses or potential losses. So if you are exposed 50K into stocks and you prime a 10 to 20% loss or paper loss if it comes down, right? So you want your VIX positions to make you anywhere from half of those losses, right? That's how a hedge works, right? It can fully hedge or it can halve the loss for you, right? Get the understanding and rationale behind it, right? To fully cover this in more details, I would have to spend a lot more time and to explain a lot more things over here, right? But I'm trying to do it in a gist and a jiffer. Yeah, okay, but that's the general concept over here. Yeah. All right. Andy, right now, I'm not too sure what you're asking about over here for this journal, right? But this journal will be covered on a week-to-week basis for public, right? For our members, you realize we have a different live trading journal, right? So that live trading journal is accessible for all of you, I believe. Yeah, all right. I do believe it's accessible for all of you. Yeah, all right. Facebook user, my premium collected for JD. Yes, thank you very much. I need to adjust it. Right, it's 9:35. Right. Okay, now done and dusted. 9:35. Thank you very much for reminding me on that. All right, how will I be running an IMP receipt? It is in our plans over here. All right, but at the moment, things are not opening up, and we can't realistically still run a physical training session as yet. Right, but once things are stabilized, all right, and you know, we make sure that everyone is well protected, okay, we will be organizing one of those refresher sessions. Yeah, all right, we will be. Yeah, okay, but do keep a lookout. We will be looking to add some value to the IMP community. Yeah, all right, so keep a lookout. We will be posting it really, really soon. Yeah, all right. Andy, all right, Excel journal. Andy, you can be more specific. All right, post what you want over here in your mentorship group. Yeah, all right, post it in the mentorship group, Andy. All right, and then I will reply your questions from there. All right, let me know what you're looking for specifically. Yeah, all right, Andy, thank you very much. Mittal, let's see your question, Mittal. right? If the VIX spikes before we sit for any Friday session, it's better to close the position at that time. Now, Mittel, you must understand, these VIX options, right? They do not expire on standard Fridays. They actually expire on Wednesdays in the middle of the week. That's why you saw that this expiry is 20th of April. Yeah, right, because it's next Wednesday. Yeah, it's next Wednesday, right? And then you realize 22nd of May is also a Wednesday, right? So these VIX options over here, right? They do not expire on Friday, just like other normal options. Yeah, okay, so that's also why at the beginning when I did these trades, I did warn our attendees and our participants, right? This is a slightly more advanced level option selling because of the nature of the product by itself. Okay, and as all of you can see as well, Terence, why are you paying $490 to close this trade, but you only get $370, all right, although it's the same strike? That's because when you sell the VIX option, the VIX underlying is not the index itself. The VIX underlying is actually one of the VIX futures. Confused yet? All right, now, so the underlying for this product is a slightly more advanced level. It is on the VIX futures itself. And if you're familiar with future pricing, right, 22nd is on, how do I say this? 22nd is on, if I'm not wrong, oh, it's not 22nd, it's 18. My apologies, I recorded it wrongly. Oh my goodness. 18 of May. It should be 19 actually, if it's on TD Ameritrade. I have no idea why on interactive it shows 18, but that's how they recorded it. But let's check once again. All right, VIX. TD Ameritrade, where are you? There you go, 19 May. Right, so if you go check 19 May, that's a Wednesday. Right. Okay, now, so once again, Mittel, the only reason why I'm closing it today is because we don't have a live session on the following Wednesday. Yeah, okay, so that's why I'm choosing to close it right now. Yeah, okay, I'm choosing to close it right now. Okay, just in case anyone is following it. Yeah, all right, they will not be left lost over here. All right, although some of you are not my students yet, all right, I will still not leave you being lost. Yeah, okay, I actually want you to be able to learn from these segments that we're running every single week. Right, and then when you're comfortable and when you feel ready, right, by all means, embark on your journey, join us on one of our mentorships, all right, where you can continue your learning experience, right? And now I remember Hulk, right, Hulk and Nickel, right, Hulk and Nickel, right, instead of waiting for your refreshers over here, right, if you're interested to find out how you can enhance your learning, all right, and also start latching on some of the live trades that we continuously do, right? You can send our team an email, right? Our team right now is email address is b@impossibleinvestors.com. Right, I'll put up a banner, okay? I'll put up a banner for all of you. Right, so the email address is over there. Right now, you can inquire about our trading membership, all right? Our trading membership, all right, where you will actually get a chance to restart and re-kick your entire trading journey with us. Right, and also be part of the twice a week live trading webinars with us. Yeah, okay, so rather than sit and wait, all right, you can consider, right, if you want to take up our trading membership, which is an annual membership over here, right, for one entire year, you'll get up to 104 live trading webinars, right? That's absolute value over here that we're putting out. Yeah, all right, you can consider that. All right, now, so Mittel, let's see your other question. I was asking about the VIX position taken today if it spikes anytime later. Mittel, I'm not very clear about. Oh, yes. All right, now I get your question. It's following up. Now, so for this particular trade, all right, if the VIX do spike, all right, and the premiums die down, all right, so if I can end up with a profit on the overall trade, I'll start to actually seriously consider closing the trade. Now, so what do I mean? If we add and deduct all things, so now I've collected 85 cents, I've collected a further 370, but I've already paid out 490 to close one of those trades. That means right now, oh, I'm still down. Oh my goodness. I'm down 35 cents over here. Now, so I may actually, because of this, hang on all the way to the end. Okay, I may actually hang on all the way to the end. Okay, but if the premiums die down and I pay up something like 50 cents to close it, maybe over in the next 1 week or 2 weeks, I may consider doing that. Yeah, I may consider doing that, because that means that my loss will only be about 80 over cents, and that was meant to be the hedge, all right, where I made profits on the other trades. Okay, so that's fine, give and take. Right, I'm wrong on the hedge, right, but I was right on all the long positions, right, where I feel comfortable taking because I knew I had a hedge. Yeah, okay, that's what a hedge does. Yeah, okay. I hope that answers your question, Mitel. Okay, I don't see any other further questions apart from those that were raised over here. I hope you did enjoy the segment today. And once again, before we end off, if you have not helped us click the share button, by all means, do go ahead and click the share buttons and also the like button before you leave the session. All right, thank you very much. And I look forward to seeing all of you at next week's live trading session again. Right, I will update all of you again because I do have a clash with my coaching masterclass that is happening next Friday as well. Right, so if I'm able to do this, I will run the segment next Friday. Right, but if not, I may have to be forced to take a 1 week break over here. Right, due to the clash in schedules. Right, I hope all of you can understand that. Okay, but I will be posting an update. Okay, to let all of you be aware of that. Okay, Wave Rider, yes, 24 hours next Friday. That's why there's a clash. Right, so I'll see all of you next week. And for those of you who are listening to me right now, right, and you are in my trading membership, see you next Monday for live trading. And if you're part of the 24-hour program, I'll see you next Friday. All right, next Friday is our first induction session. Right, thank you very much. This is Terence Tan signing off for this Friday's public segment. Right, bye-bye, everyone. Thank you very much.